Hello, everybody. I'm Rob Smith of the Smiths in the Black channel at TickerTacker.com. I'm also on Twitter at Rob in the Black. You can follow me there too. I always get really excited, especially for people who've never heard of what I'm going to tell you, because I'm going to change the way that you look at price action if you've never heard anything that I've talked about. A little bit of history. I've been doing this 31 years. I was a member of the Chicago Stock Exchange for 16 years. I was a listed specialist, an OTC specialist, independent trader, did a lot of stuff like that. And I've been looking at charts at a long time and finally figured out how things must work, how they have to work. And like you, it's not always easy when you start off. And so I'm going to say that right now, I'm talking to two kinds of people. People that already make money, that want to make more money, and people that are struggling to make money, right? And I'm going to show you to start why that is, because it's commonly known that most people that set out to trade for a living lose money, right? It's like when you tell people that you're going to start being a trader, they immediately think you're going to lose all your money. And usually they're right. The question is, why would that be, right? Why would most traders lose? Look at all the information you have here to make money, right? And I'll tell you something, all right? The one commonality that, have people all over the world, both sexes, all different ages, the one commonality that they have, they all try and use technical analysis. That's the problem. It has to be the problem, right? And so how would we know that? Well, I went to a place called college, otherwise known as a university. So you can study physics, mathematics, and stuff like that. And so when you come to what people are trying to use to predict the future outcome, it doesn't line up. And so if you go to moving averages or oscillators or anything like stochastics like that, the problem is that you're applying the wrong science, right? Because you've heard the term momentum, right? Okay, well, stocks can't have momentum, right? Mass times velocity is the equation for momentum. Stocks don't have mass. It's not possible. So it's not that they don't work. It's that it's not possible that they could, right? Because you're not tracking a moving object. What you're tracking is an aggregation series, what I'm going to show you. What that means is that for every buyer, there's got to be a seller, period, right? And so the question is who's getting their price, which I'm going to show you in a second. So another problem that people will have, they'll try and use Fibonacci retracements and extensions. That's not true either. That's not, math is an exact science. If that were true, you could show me every single move ever exactly to the Fibonacci mathematics without question if that was applicable. It just isn't. Pattern recognition. Well, have you ever noticed that for every pattern, there's also a failed that pattern? What does that tell you? That tells you the price could still go up or down, right? Yes, it does. So the question is then, what could we use that we would know for sure? Only what we know to be true about what's going on in price action. All right, so I'm going to show you this. So here you're going to see SWAV, and I just picked this out because it has it. So the first thing that you want to know about is something called time frame continuity principle. Okay, so what that means is you'll notice here on this chart, upper left, upper right, this monthly is green. If you go to the weekly, the week is green. If you go to the daily is green. If you go to the 60-minute, anytime this is green. All right. What that tells us is the buyers are more aggressive. They are taking the offer, right, by separate prices and times. So we gain more information as time goes on. So we want to have separate openings because we want to identify separate participation groups and what they're doing. So on any given Monday, the 60 and the daily group and the weekly group are all the same for the first hour. The second hour, that uncouples, right? On the second day, Tuesday, that uncouples the daily from the weekly opening, right? Now you have a new weekly opening or new daily opening and 60. And then on that second hour, that's when they uncouple and we have 4 separate openings, right? By price and time. Now, when we start a month like this week, the entire week and month will have the same opening. That will uncouple next week, right? Doesn't mean we don't trade, but we gain more information. We want to be knowing what they're doing by price and time. Also, why this is important, all right, is that we know that there are 70% or more of trading is now automated, right? And so you maybe hear people say, oh, those algos are just picking me off. Nothing could be further from the truth. It's when people see it tick down and then go back the other way and think an algo just came down and took out your order and went back the other way, it wouldn't make any sense. It wouldn't make any money, right? It just might seem like it because you don't understand what's going on, but that's not what's happening. So you have to tell an automated program 4 things. First, which vehicle? You want to trade the SPY? You want to trade Apple? What are you trading? All right. The second thing you got to tell it is, do you want it to buy or sell? All right. The third thing you got to tell it is, how do you want it to buy or sell? Do you want it to stay on the bid, or do you want to take the offer? Do you want to sell by staying on the offer or hitting the bid? The fourth thing you got to tell it is, when do you want it to do this? So when we have the 60 green, and these are all separate openings, the daily green, the weekly green, and the monthly green, here's what they told the programs. SWAV, buy, take the offer, do it now. There's no other explanation for this. This must be occurring, all right? So when we have this in the S&P, right, then we get those futures moving, right? That's a big tailwind to anything that's you're going to be long that's in the futures. That's something you'd want to know about, right? So we use that, and then we can simplify things, because from one bar to the next, no matter what I'm going to tell you about what patterns they think they see, all right, from one bar to the next, there are only 3 things that can possibly happen, all right? We call them scenarios, okay? The first scenario here is an inside bar. We call that an inside bar, scenario 1. It wasn't strong enough to take out the high, and it wasn't weak enough to take out the low. That's consolidation, all right? The next scenario is a 2, taking out one side. You'll see this, didn't take out the high, it took out the low. That's directional, 2. The third type is one of the most important things you can know. You take out both sides, because that phenomenon is how you properly gauge magnitude, how far something's going to go, because we know that outside bars exist, that therefore taking out both sides of a previous range exists. So when you fail on one side and start coming back through, we know where it's going. You're going to take this thing out for sure, and hopefully even further, because you have time frame continuity. You've got the machines wailing on these things, right? Another problem with pattern recognition is that we don't really want to look at a pattern. Like, I can say it's a broadening formation, and I'll show you that. How people miss this is beyond me. But software is going to present charting to you the way it wants, right? So you don't want to read a chart. You want to analyze data. Okay, and what I mean by that is that you'll notice here, if this was a 2-month chart, these 2 bars would be outside of all of this, you see? So now the question is, which ones do we take? Do we just jump in with continuity? No. Now, there's only so many ways that price can reverse, no matter what somebody's going to tell you about volume and capitulation or whatever they want to tell you. There's only so many ways price can reverse. If you just know the 3 major ones, you know more than enough. So the way price reverses here, you'll notice this is a 2 to the upside by taking out the high, a 2 to the downside right here, 2 up, 2 down, or a 2 down, a 2 up is a reversal, okay? The other way price can reverse is to go down here, 2 down, inside, 2 back up. And the other way the price can reverse, failed 2 goes 3, right? If you know that, right, you know plenty. Because if you're to say something, I'm going to buy one on a pullback. I'm going to buy it on a pullback. Are you? What's a pullback? It's when it pulls back. And I'm like, yeah, well, why would that go up? I'm like, it would. You just have to wait for a reversal. So you're going to notice this is the monthly S&P, all right? Spider. The 2-2 reversal here, bam. right? You'll notice that these 4 months then become an outside bar of all this. From here to here is an outside bar of all of this, right? This is how price discovery works. It goes back and forth. So if you've ever made a little bit of money, made a little bit of money, made a little bit of money, and then given it all back and then some, you were a victim of this stuff, okay? It's also important to remember there's only so many ways that price can continue, all right? A 2 in one direction followed by an inside bar, and a 2 in the same direction. A 2 in the same direction continuing to go, or the 2 failed goes 3 with continuity. This is both a reversal and a continuation pattern when you have continuity, right? And then it can get worse, because what's happening here is this high got rejected hard, right? And so when it goes down to here, you have the 3, outside 3, and then takes this out, this rejection is still occurring. That can be very powerful, because if you go here to the 60 just this week, what happened? Boom, rejected, outside 3, 3, 2, exactly like the monthly last year when we got clobbered, right? That's something you'd want to know about. So when we know what reversals look like, right, you just wait for them. If we go back to spider month, here, what do you see? I see the 2-2 reversal, the inside bar where people are trying to get their money back after getting clobbered and getting chewed up, the 2 down, the 1, the reversal. Here, the 2 down, the inside, the reversal. So one of the things that I can point out about this chart here, this reversal occurred over the 200-day moving average. So don't tell me that's bullish. Down here was a new quarter, right? When that started off and went green, it was green on the month, it was green on the quarter. We didn't have the year, but you had the quarter, the month, the week, the day, and the 60 going your way, you see? And so this is way below the 200-day moving average. And so how we use that, now that we know the futures are going back up, at this point, we want to use that to look at other things, right? So here, you'll notice Amazon, right? Here is the new quarter, right? Is the pandemic good for them? It is. So all we had to do was wait for that new quarter to begin, have the futures go full throttle, we call it full time frame continuity to the upside, and then look for reversals on monthlies here, right? This was also an outside bar, right? And so that's important, having a reversal back into an outside bar, because that gives us our magnitude, because we know it's a broadening formation on a shorter term time frame. So when it took this out, boom, Amazon, no reversal on the monthly. This took out 1996.33. 2 up, 2 up, 2 up, 2 up, 2 up, and then there goes your reversal for the 2, failed 2, goes 3, right? You also notice this is an inside quarter. If this was a quarterly chart, you'd see this, now it's stuck in here, right? Also, Wayfair is another one. It's perfect, right? This is stuff you want to know about. The new quarter, just down below its 200-day, I probably was, don't even know, but I'm going to say it was. And boom, over 64.89, 2 up, 2 up, 2 up, 2 up, 2 up, 2-2 reversal, let them have it. And there you go, drops back in. So if we go to shop, here, all right, this is something else that we look for, the 2 in one direction and then the 2 down, all right? And then the 2 back up with full time frame continuity. Why? Because I said software is going to present it the way it wants to. So we have things we call a sideways 30 minute, right? All software has the 30-minute update on the top and the bottom of the hour, right? That's the only way you can get it. But if you had software that would update at 15 after to 45 after, your 30-minute chart would look different, right? So you can have an inside bar that you can't see on a regular chart until you train your mind to do that. We do that to double, you can double your signals. Did you know that most people don't even know, most traders don't even know if there's 60-minute updates at the bottom and the top of the hour? That's important. We prefer the bottom of the hour. We still can have a participation group by price and time, right, for 1 hour, but we want to capture that opening. That's going to be our benchmark, right? But most people don't even know that. That matters. Another thing that we can do to gauge the direction of the futures, they're going to trade in the direction of time frame continuity and the most twos in the same direction, or failed twos going 3 with continuity. It has to. It's impossible not to. So when we run scans, I'm constantly scanning that. See, how many twos do we have to the upside on the month, the week, the day? How many twos do we have to the downside? How many ones do we have? Because you want to avoid ones, you're going to get chopped up in there, right? So there's only so many combinations too that can happen, you know, from 1, 2, and 3. So we always know what's happening. It's not a mystery. Where one of the problems with technical analysis and most people's analysis, it's subjective. They're trying to figure it out by using screen time. And if you're one of those people that I said at the beginning is making money using that stuff, that's great. Because you implement this into it, I'm going to put you on steroids, because your analysis has nothing to do with the outcome. What it means is that you have excellent risk management, right? Because the analysis, it's not possible for it to have any dictatorship on what's going to happen in the future. It just isn't possible. So another thing that we want to do to use the futures to our advantage is, let's say, like yesterday's SPY, right? SPY's getting hit, right? SPY gets hit yesterday. Okay, so we want to look around at stocks, right, today, and we're pretty positive we're going to have an inside day here. That's a 1, right? So tomorrow I want to know either side of that thing, right? And the high concentration of them and how that plays out, right? But we can use that to go after stocks because we know psychologically and physically what's going on. What do I mean by that? Let's say you were short something yesterday because the market's tanking, right? Overnight, you said, I can stay short, market's tanking, I'm good, right? But when the market starts to recover, we want to go after anything taking out yesterday's highs. Why? Because the shorts, they got what they wanted, right? They got the market to tank, but then they come in the next day, not tanking, right? So we also know that there was a high concentration in one sector. We call it a simultaneous break. What that means is when you have a high concentration in any group, it could be the futures, it could be sectors, it could be by just a shorter time, like a 30 or a 60 minute. In this case, it was daily and weekly. And because we started a new quarter and monthly, that was an energy, XLE. So you're going to notice this. XLE, green on the month. I know it's a brand new month and a brand new week. Anytime these 60 was green, we know them buying machines are on, definitely. And they weren't just buying XLE, they were buying the stocks across the board, right? So we know that the computers were told to go after these guys. So there were some monster nice moves in here until the reversals, you see? So that's how you can pick up on that. Also, we can go after the other side. So once again, SPY, recovery day after getting waxed, right? So we also want to go after anybody taking out the lows, right? If you stayed long something, because they got what they wanted today. The market recovered to a certain extent, right? But if their stock didn't, they're screwed. FSLR, monthly, red, weekly, 212 reversal, 2 up, inside, back down she goes. Daily, red. Anytime this 60 was red, you got problems. Did I just point out the 222? I did. two down, two up. That means you had corrective activity. Boom. When you take this out, these become an outside bar of that, right? Very important stuff. So another thing that is important too is when I talk about the continuity, it's not just whether you have it or not, it's how much you have, right? And so by that, I mean, if we go back to November, SPY had a good November. Small caps had a real good November, right? And so as time goes on, you're also going to notice here, if you just look at everything, you're going to see everything. Once you see things our way, this is all you're going to see, right? Here, what's this? The 2, 1, 2, the 2, 1, 2 continuation, the 2 back up, right? But as time goes by, we want long red and green bars. That means they're aggressive, really aggressive in there. Some people say you can't chase. I'm like, the hell I can't, right? If you've ever said it's in beast mode or I got out too early, yeah, that's not us, right? We want to look for stuff like this and then we want to pour it on, right? I don't want to, you'll hear people who don't know how to gauge magnitude will say, I think it's going from 30 to 50. I'm like, do you? And then it goes from 30 to 50. But they didn't, and then they'll be the first one to tell you, I told you. And I'll be like, yeah, and what are you doing? They'll be like, well, I'm selling my last piece out at 50. I'm like, dude, I want to be as long as I've ever been if it's going from 30 to 50. When it gets to 50, I don't want to be piecing out of that. Tells you they don't know. We know how to gauge magnitude because of these outside bars, right? The way I just showed you, right? And if you don't have a reversal against you, that's still good. Then you can look for the shorter term reversals back into the direction of continuity. You're going to have like a 5 or a 15 minute little corrective activity, and then the computers kick back in and take it sailing again. So we want to pour it on. We want to add to our winners as much as possible, right? And cut our losers fast. Because of what I'm showing you, we shouldn't be wrong, right? If we're wrong, when we're getting to get stopped out, that's going to happen. But we're not going to be wrong, right? We're going to know what happened and why it took us out. There's going to be an unknown participant in there, and I don't want to mess with them, right? Because I know that if something's really going to move, there's going to be a ton of opportunity to get in. There always is. They're always going to have this slight corrective activity, 2-1-2 back down, then 2-2 back up on a shorter time frame, if it's really going to be that powerful. So if we go to the yearly chart, are you sure this works, Rob? Let's say that you're a fund manager, right? And you're not going to mess around with me little charts here, right? You want just macro charts. So SPY, if we go here to the yearly, going back, all right, knowing what we know about continuity and scenarios. So let's say you started here, right? 1989. This is a 2 up. You're long and strong and good, right? No problems there. You come into here, pokes up a little bit and starts to go red. You would know anytime that's red, it's time to protect yourself, right? That's when you use some put protection. Here, 2 up, no problems there. 2 up, 2 up, 2 potential 3. You can protect yourself with puts. 2, 2, 2, 2, long and strong. 2. Now here, when it goes to the highs and starts going red and coming back, you know it's protection time. If not, get short, right? Because once it starts coming back through here, potential outside 3 of this, which it would have been, it just ran out of time. Now you have your 2-2 reversal here. Now you got some serious problems. This is where you'd know to protect yourself because the continuity changed. Here's where you had a yearly reversal to the downside. That's a 2 up and that's a 2 down. These 2 become an outside bar of that. Still 2 in its way down here, right? 2 years of letting it get waxed for you to know to be short. Then what happened? New year here. Green, cover, long, fine, long and strong. Then inside year, the 2-1-2 2 to the upside. 2, 2, 2, 2. Uh-oh, financial crisis coming. Boom, 2-2 reversal right there. Now, one of the important things is why the broadening formation is so powerful. And like I said, it's a phenomenon. It's not necessarily a pattern. Is that when you come back through a previous range, right? People are going to get stopped out, right? They're going to be stopped against well-known pivots or where they got in. We know what they told them, right? Here, 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 here. And so when you have something like the financial crisis, here's your 2-2 reversal, puke. When you have that condition going back through the range, it tends to accelerate because they've told, now you have computers helping you. By price and time, they said, SPY, sell, hit the bid, do it now, right? Now, when you come back through a previous range, you're going to stop people out. And when you stop people out, they remove liquidity. And there's not as much stock to go after. And so that speeds up the aggregation series. They got to hit it harder. So you get this. Now, these two become an outside bar of all this. And these three, outside bar of all of this, right? If this was a 3-year chart, that's when you train your mind to see the data, not try and read the chart. That's true. So we know that both sides of previous ranges get taken out, don't we? We do. What'd you have here? Change in continuity. Let's get along. 2-2 reversal. This was red. It was 2 and almost went 3, so you would have been protecting yourself in here. And then back 2. Where's it going, Rob? Up here, because these are going to become an outside bar of this because we know that phenomenon exists. So right here, we know we're going to take this out so long as this is a 2. Turned out to be a huge year, didn't it? Did. Bam. 2. 2. This was, I believe, a 2 that you had to protect. Check out the highs. This actually went 3. So one of the important things about knowing that 3s exist is this. Once this goes green, we're taking out this side because we know that phenomenon exists. You take out both sides. And if you fail on one side and you change continuity, you're going to take that out, right? Unless you have a reversal against you, which you do not. 3-2, like I showed you, this is to the upside, like that 3-2 I showed you on the monthly from February, March last year, and the opening 60 this week, all right? Here, 2 up, protect myself because of the red. Runs out of time, no 3 for you. Change back green, 2 up, still no reversal against you. And then this year was quite the humdinger. Here's your big outside year, right? So below here, you knew you were in trouble all the way down through here, right? Then it becomes an outside bar. So then all we had to do is wait for change in continuity on that quarterly. And the quarterly here. The quarterly here, all right? So the 1-2 back up. So 3-1-2 outside inside is a thing, right? I'm not going to go into everything today. That's a thing, and that's potentially what's going to happen tomorrow in the SPY on the daily. The outside inside, right? So because we know this is a broadening formation, when we take this out, we're looking to take that out. That's our magnitude, which it did. Here was your inside quarter. Boom, boom, still good, right? And so now what we're doing is holding off, right? So to see, we got a new month. What's going on here? A new quarter. We want to know what's going on here because we slightly took that out. We could potentially go 3 to the quarter to the downside. But at this point, we got a lot of major ones going on. Amazon, that quarterly needs to break, all right? Netflix, that quarterly needs to break. Facebook, that quarterly needs to break. You got NVIDIA, all right? So we want to be very aware of these quarters because if you knew this, what I just showed you last year, here's your United Airlines inside quarter right here, all right? If you go to the yearly, look at this. Is this a 2-1-2 reversal on the year in United Airlines? It is. Did we know about that? We certainly did. So at this point, we are starting off a new year new quarter, new month, right? So as far as uncoupling is concerned, we don't uncouple until the monthly, weekly, daily 60 until the second hour next Tuesday. You said, doesn't mean we don't trade, but we gain more information. And then the quarterly doesn't uncouple until April, right? So the things that's important too here, I want to show you something. So once you understand what I'm telling you, we already know what your winners and losers look like. And this is, I'm going to show you something to keep on your desk, right? And you'll see it lines up exactly as I'm telling you. Give me 1 second. I thought I had it up. Check. There it is. Right? If you keep this on your desk, I promise you, it'll line up with exactly what I'm telling you. You need to use multiple time frame analysis. That's another problem that people have. Some traders only look at daily charts and then maybe some intradays for entries, but that's as far out as they go. That's blind as a bat. If you don't know you're trading an inside month or an inside week, it can get chopped up. So losing trades look like this. Chopped up trading in a scenario 1. It's an inside bar. It's doing nothing, right? Scenario 2, going against you. You're fighting a 2. It's taking out one side of the range and you're fighting it. Scenario 3, going against you. That's when you give away back all your money. And it goes, when you make a little bit, make a little bit, make a little bit, and they get killed. Yeah, that's it. That's what's going on there. Time frame continuity going against you, right? You're fighting the machines, right? So when you think algos are picking you off, they're steamrolling you if you're fighting time frame continuity. Winning trades look like this. Scenario 2 in your favor, scenario 3 in your favor, time frame continuity in your favor. You have to at least have some of that, right? You might say, oh, it's still an inside month. Well, yeah, that's fine because there's going to be a lot of room on the monthly to move. But what I'm telling you is you have to have some of this to have a winning trade. It's impossible not to, right? And there's your losers. So the good thing about this, we can communicate very quickly between each other, all right? I make a video every night, rarely longer than 3 minutes, because once you think like us, we can communicate very quickly because we all think exactly the same. There's no more subjectivity. It's a 2 or it's not. It's a 1 or it's not, right? It's a 3 or it's not. As we say, a 1 must go 2 eventually. So that alerts us that there's going to be a 2 coming, right? A 2 can stay 2 or fail and go 3. But once you're a 3, that can't change. It has to be an outside bar. And the reason that's important is if they're willing to take out both sides of the previous range once, they might do it again because they're aggressive. So how do we know that? Back to the SPY. Here. Took out the highs last year. Boom. Outside. If they're willing to do it once, they might be doing it again, and they did, all the way back up. And that's what gives you this. That's what gives you this on the yearly chart. They took it out, they went all the way down, and they came all the way back, right? That's like 2-3 years of trading in 1 year. It was awesome, right? And so you can continually line all this stuff up, right? Sometimes things will be in conflict, right? Where you have some are green, some are red. You can avoid that. We look for things that are lined up, right? And so if you have something that's like totally countering the futures, that means you have aggressive, like FSLR, aggressive sellers. Now, the SPY was in conflict because it was still red, in the month and the week, but that identifies natural sellers in there. We know they are selling FSLR. There was no reason to think this thing was going up today, right? I'm gonna play it for a bounce play. That's not a thing, right? That's going back to physics, right? So another thing that I'm going to leave off with is that, like I said, that we communicate very quickly. And when you know what I just told you, There's also intraday time frame continuity, 60, 30, 15, 5 for day trading, right? You can go down to a 1 minute, right? And we can be very active. Some people are extremely active. As I showed you, you can use this for longer term investing, whatever you want, right? But because of that, there's, like I said, unlimited amount of signals during the day. We can't get to it all. We have a big community and we're going back and forth. Luckily, we can communicate very quickly without a chat room going, is that a thing? No, let's go on Twitter and vote and see if it's a thing. We know what a thing is, all right? And so this is my desk. And most people look at it and say, oh, that's overkill. You don't need all that, blah, 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 right? I get that all the time. I'm like, once you know what I just told you, we can't get to it all. I'm constantly scanning for all these conditions, right? I'm constantly monitoring the market based on all these things that we know. And then we can ferret out where the computers are and what they're doing, who they're buying. Like today, Suave, there you go. Like I said, anybody who's short this thing overnight, they got what they wanted. Market tanked, right? And then they come in today, stick it to them, bam, like so. So another thing that you want to do, once you understand all this, not only is it good to be part of the community, because we believe trading should be at least a 2-person job. And I'll tell you why. Almost any trader will tell you they're their own worst enemy, all right? However, when you think exactly alike, the exact criteria, and one person's hitting the keys and the other's doing the analysis, much more efficient. Less likely to make a mistake. 2 people would have to make a mistake because we agree on the criteria. So when I train you to do this and you become part of the community, as I like to say, I become the world's greatest assistant. All I'm doing is hawking all this stuff and searching and searching and searching and be like, here's where that is, here's where that is, here's where that is, all day long. Then the last thing you want to do, not the last thing, you want to tell people about this. And the last things that people do, once they learn this, you teach the kids. It's very visual. Children pick this up. Some people pick it up so fast it's ridiculous because it just makes sense, right? Everything else doesn't really make sense. If you've been listening to, like I said, most people lose because of the things they've been told, right? That doesn't happen once you know what I just showed you, right? So people will train their kids as Allison. She's been trading for 2 years. She's been using it to trade Bitcoin. She gets her allowance from her dad in Bitcoin and has been using to trade that. She's been doing obviously very well, but that's something you want to think about in the future. Not only is this going to help you, it's going to help your family going forward, because I'm telling you right now, eventually, no trading decisions or investing decisions are going to be made without what I just showed you. Software companies like TrendSpider already have my signals in there with 1, 2, and 3 on it. We have a Facebook group of over 2,400 traders with scans for everything. Thinkorswim, TC2000, TradingView, Scripps. They just contacted me. They're going to put the 1, 2, 3s right in there too. This is happening. The software conversion is happening. Eventually, no trading will be done without what I just showed you. I promise you that. All right, Dave, I think I'm coming up on my time here, sir. And I'd like to thank everybody for coming out. Real wonderful. Thanks for listening. I always like when I get a chance to talk to people.